Euro dollar. So another gap open for the euro lower, with the market trading down to the 109s ahead of this latest minor bounce. At this point, the market still continues to be locked within a consolidation, and key levels to watch above and below come in at 1467 above and 108.19 below. A break on either end is required for clearer directional insight, though with the market breaking to the downside most recently, the pressure remains on the downside for eventual break below 108.19, which guards against the critical yearly low and multi-year low, 12-year low for March at 104.62. At this point, on a short-term basis, look for a daily close back above last Monday's high lows, which come in at 12.79 and 109.55 respectively for clear short-term directional insight. Sterling dollar. So cable is broken down back below previous resistance at 155.50 as the market continues to correct off that 2015 high set just several days back at 59.30. At this point, a close below 55.50 will open the door for an acceleration of declines in this market back down towards that low that we saw in early June around the 150-170 area. However, if the market can hold above 155.50 on a daily close basis, this will keep the more constructive outlook intact and open the door for the possibility of a retest of that 2000 high at 159.30. Dollar yen. So dollar yen setbacks have been well supported once again below 122, with the market just trading down to 121.85 about ahead of this latest minor bounce. At this point, the market should continue to be very well supported on dips below 122, with any setback seen ultimately very well supported ahead of 120 if we do see the market try to break down below 122 again. The structure remains highly constructive here, and the market is in the process of looking for the next medium-term higher low ahead of that next major upside extension back above recent multi-year highs that were set back in June at 125.85 and then towards the 130 area further up. Euro Swiss. So Euro Swiss has seen some setbacks in early trade this week, although the market continues to be very well supported in the 103 area and is favoring a recovery back towards that 105.75 high that we saw on the 4th of June. A break above 105.75 would then expose the 108.15 highs from February. At this point, only back below 103 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie dollar is broken down below some previous multi-year lows at 75.33, and this opens the door for the next major downside extension towards the 70 area over the coming weeks. At this point, though, daily studies are a little bit stretched, so we could see a bit of a bounce here on a short-term basis before the market looks to roll over again in favor of bearish resumption. Really, any rally should be very well capped ahead of the 77 area, with only a break back above 78.19 to compromise the immediate bearish outlook. Dollar CAD. So dollar CAD last week broke above some key resistance that had been in place right around the 125.60 area, and this break confirms a higher low now in the 21.30 area and opens the door for the next major upside extension back towards and eventually above the 2015 peak that was set back in March at 128.35. At this point, any setback should be very well supported ahead of 23. Kiwi dollar. So Kiwi is broken down, extending declines to fresh multi-year lows, trading down into the 66s thus far, with the market now focused on its measured move objective at 6,500. However, daily studies here are oversold, and there is the risk for a bit of a short-term bounce before the market looks for a lower top and heads down toward that 65 area. Ultimately, only break back above 72.32 would compromise the immediate bearish outlook for Kiwi. SPX 500. So the S&P 500 has gapped open on Monday, with the market trading down just shy of that critical support from March at 2040. This is a major base, and if broken, if that 2040 level is broken, it will set the stage for a major top in the equity market off record highs in May and open the door for an acceleration back down to the 1900s. However, while the market holds above 2040 on a daily close basis, there is the risk for an additional upside back towards that 2137 record high. Gold. So gold has once again been well supported after the market broke down to fresh multi-day lows into the 1150s, supported at 1157 ahead of this latest minor bounce. If the market can hold above 1170 again, it does suggest that we could see a recovery back above recent highs that we saw in the 1206 area and then towards 1232 further up. However, a break back below the low that we saw last week, which comes in at 1157, would compromise the recovery outlook and expose a retest initially of the 2015 low at 1143 and then the 2014 base at 1131 further down.